So this is going to be the drill exercises for liquidity, displacement, retracement, expand. We're going to go ahead and look at 3 different days on the chart. And well, I want to, but it's going to be 3 different videos instead of all in this video because it'll get really long. So let's go ahead and we'll start labeling them out. And we're going to start in December of 2025. Why December? Typically, it's a month that's a little more difficult to actually trade in because volume, movement, everything like that just isn't as efficient in, say, something like in October or March. So it's a little more difficult to find a clean trade. So if your model works in that environment, it should work in any environment. And that's a good tell on whether or not you have a good working trade idea and strategy. So let's take a look at December 10th. And so here we are. We're going to go ahead and look at September 10th. 9:30 open is going to be right here. This is 9:30 open. So we're going to go ahead and we're going to want to look for liquidity to the left of us. So first things that we're going to look for is daily highs, previous daily high, previous day high, previous day low. This is the 8th, so this is going to be the 9th daily high. So previous day high, previous day low. And we always want to get to the 50 here. So we're going to put the previous day 50 as well. Now we need our sessions. So we're going to be looking at Asia and London. This is going to be where Asia high is, Asia low. So this is all Asia session. Well, I'm not going to mark Asia session high because it's not really important. You know what? Never mind. Yeah, let's just put it in there. London session high. All right, London session low. All right, let's get in a little bit closer. $9:30 open. So I trade primarily New York session open until lunchtime. I'm looking for a trade. If I don't get anything there, if I get a loss, then I'm going to be looking in the afternoon after lunch session. But I'm primarily looking at this open. Okay. What's important to me when I'm at New York Open or waiting for New York Open to happen, for me to engage with the market, this is obviously the ugly and choppy market here that we have on the 10th. If I'm looking at this, hindsight, I'm kind of looking at this and saying this is not something I would ever want to trade in. You wouldn't want to get into this. But if you have rules in place and something like this can still make sense. So let's try. A session high, London takes out, sweeps, right, and then it goes rating session low and takes that out and creates its own highs and lows and liquidity there. And then we get to New York Open and 9:30 comes and we get this liquidity sweep of the London session low right here. Let's change that to red. So liquidity sweep, London session low, and previous day's lows have already been hit. So I'm looking for what opportunities can exist in order for us to, get into a trade here, because obviously it's chopping and consolidation. So liquidity, remember we're looking for the LDRE. So LDRE, that's liquidity, displacement, retracement, expand. Liquidity has been swept, so at 9:30 displacement is a market structure shift, and so now we're looking for, and we get this high created as after this low swept. This is displacement, and so now I want for this to kind of be where I'm going to get my market structure shift. Instead, I get a failure swing here, right? So staying in the means of this chop, and then comes back down and it fails. Back to London low. Comes back up, fails again. Comes back down, sweeps that low one more time, and then we take off. And now we have market structure shift. Now this counts and this did not fail. This took it out convincingly and it closed outside of it. So now this is a market structure shift. So now not trading immediately after, although technically you can, I'd advise not to. What do we want to do? We want to wait for this to come back into this fair value gap or inverted fair value gap or some sort of PD array like an order block, an imbalance of some sort. What I use and what I like to use are fair value gaps and inverted fair value gaps. So what do we have here? We have an imbalance on the top of this candle, and this is where your fair value gap is. Yeah, okay, so now I can enter right at the top of this thing, or and then go. So my entrance is going to be first entry, and then this is an entry right here. This is where my stops would be, because this is displacement. So in this case, if we had many failure swings, it'd be, my stop would be at this displacement level. I'm sorry, market level. So in this fair value gap, this is where my entry into the trade setup is going to be. Now let's go back. We got all this liquidity, Asia high, Asia low swept, created new liquidity here, London high, London low, swept, 9:30 open. We've got failure swings, failure swing here, and then that's just going to happen when you're in chop, a lot of failure swings. And then finally we get one that succeeds. Okay, this is not 100%. Nothing is in trading. That's not how it works. Nothing is perfect, but if you have rules, you can get to the highest probability of something succeeding. And so here we have in this model, in this strategy, high probability. We've got a successful swing that breaks and makes a new market structure, fair value gap, imbalance within that. And then we have a displacement that was created here. We enter there, and the first target area could actually be the previous day 50 because we have this equal highs here. but I would shoot for London session high would be target number 1. We've got that as our initial run. So early entry, initial run, then we get the retest here. We're looking for that 50 and it can go all the way down as it typically does. And it actually touches the previous day low before it launches to our second take profit target would be, and that's previous day high. And so a day in a month that is not good as far as volume, structure, order flow, just overall price action. This just looks so sloppy. Most days, because the holidays are coming up, are going to be that way at the end of the year. And yet, and still, we have our rules in place that work, and you stick to them, and you have high probability outcomes. And then your trade idea works.